Returning now to our top story, those huge falls on global markets.
For more, we're joined now by veteran Wall Street trader Ted Weisberg in New York. Ted Weisberg, good morning again. Yet another roller coaster day there on Wall Street.
Yes, mostly down though. Not too much up.
What was sparking these big sell-offs over the course of the day?
Well, I think it's usually the same motivation. Number one, continued problems in the Eurozone, and then I think we need to also pay some attention to the Fed meeting yesterday, where the Fed announced another form of stimulation, affectionately referred to as a twist, which simply means they are going to buy the long bond and sell the short end of the yield curve, as opposed to what they did in QE1 and QE2. But I think more disturbing was the comments from the Fed chairman, and I'm not quoting him exactly, but basically indicating that the economy was in worse shape than they had originally thought.
And that's all traders needed. I mean, they're skittish enough already, but when somebody like Ben Bernanke says something like that, people can be hardly surprised and investors rush for the exits.
Well, I think so. First of all, other than that comment, what they announced they were going to do in terms of trying to stimulate the economy, I think was pretty much anticipated. They are, and the U.S. economy at the moment seems to be between a rock and a hard place. There is clearly a lack of leadership coming out of the White House, at least when it comes to the economy. Whatever they seem to have tried over the last 12 to 18, 24 months simply has not gotten any real positive traction, both with the unemployment problems and with the housing market. And in general, the U.S. economy continues to limp along. And so what we're suffering from, Michael, is we have a huge credibility problem, a confidence problem. And so much of stock trading, both here and I'm sure in Australia, no different, is driven by psychology. And at the moment, the psychology just is very negative. And I think folks, based on what we've seen the last couple of days, are simply saying, you can keep the cheese, let me out of the trap. And investors have simply moved to the sidelines, and they don't want risk at any price. And let me point out to you that last week was the strongest week that the markets have had in almost 2 years, based on the upward movement of the popular averages. And now this week, we're probably looking at the worst week we've had in the last couple of years. So between the Eurozone and our own dysfunctional government here, when it comes to economic policies, it doesn't paint a very encouraging picture.
And so what's your outlook, Ted Weisberg? Also fairly gloomy going into your Friday and early next week. Would you be advising investors to, in fact, leave that cheese and get out of that trap as quickly as they can?
Well, you don't. It's this is a business that never ends. And stocks will get to levels clearly where they will become very cheap, no matter what the overlay of the economic situation. I just don't think we're there yet. I think because there is a lack of transparency, a lack of clarity, and a lack of purpose, if you will, on the part of our politicians, unfortunately the markets will continue to be hostage to the politicians, and therefore, unless you have a very strong stomach, perhaps this is a time not necessarily to sell, but certainly it's a time to keep one's powder dry until the dust settles a little bit.
Terrific advice. Ted Weisberg, as always, thank you very much for your insights this morning.
Thank you.